nine times out of 10, if you're opening near the pre-market low, it is going to be favorable to buy the dip, at least off the open. And you can see that right here. I mean, we went from what, 454 up to 456, almost, on this first trend up, all the way up to 457. And then we even went up higher to 457.50s. So just kind of wanted to bring that to your attention as well. I mean, I already mentioned it, and the same thing can be seen here on the cues as well. Look, your pre-market high is here, your pre-market low is down here. Now, if you see us opening near the pre-market low, like I said, 9 times out of 10, or maybe 8 times out of 10 or whatever, more than likely it's going to be favorable to buy the dip. And you can see that on the cues as well. Look, so we opened what, around 384, and within the first few minutes, let me see, what's this, 10 o'clock? So within the first half hour of the market being open, we trended up to 387.50s, 387.70s from 384. Also, like, the inverse is true as well on that. So if you see us opening near the pre-market high, more than likely we're going to fade off the open. What I was saying about the S&P 500, how going into last year, it was kind of the same situation where we were going to get up and test 4,600 and then retrace a little bit. And that's kind of exactly what happened. Look, yesterday we trended up, almost got there, not quite, but you might as well call it 4,600. It was 45.99.39. And then what happened? Look, we gapped down and retraced. And we were chopping around, seeming like we were going to gap fill. It looks like it was a fake out. We got dumped on. I do know there's also a lot of data coming out this week. So you also have to take that into consideration as well. Remember, I said we're going to come up here and test 4,600 and retrace a little bit. That's exactly what happened. So it seems like we could go up there and retest it again. Now, last year, we did the same thing, but when we retested that resistance again at the end of the year, we rejected harder and consolidated for the rest of the year. Now, I don't know if that's going to happen this year because the market's looking super bullish and we're already in December. Last year in December, we were selling off and then we consolidated for the rest of the year. So if we are bullish throughout December and we keep ripping and trending up and break past this 4,600, I would go ahead and say we'll see the inverse from what we seen last year, meaning that we could uptrend throughout December and then sell off in the new year, like in the beginning of 2024. I don't know that for sure because, like I said, nothing is for sure in the stock market. Nothing is 100%. All we can do is past results aren't always indicative of future results. So all we can do is just watch the price action and trade accordingly. As for now, it's exactly like I said. We went up and tested 4,600, retraced. Looks like we're actually going to go up and test it again. But in this gap, got like a fake out gap fill here, it looks like. But remember, you can gap fill to the upside and the downside. Even if you would have bought the dip, you could have scalped at least to the upside really quick, but we immediately sold off. So I'm assuming some data or something came out. Like, I wasn't really following the markets that close today. But yeah, so be on the lookout for us to go up and test 4,600 again. If we can get back up there, and more than likely we're going to hit it and reject even harder and consolidate for the rest of December. If we do happen to break past 4,600, then I would assume we'd continue trending up in December and be bearish in January or February or something like that. But anyways, just wanted to bring that to your attention real quick.